Property and casualty insurance is not always talked about when the idea of inflation comes up, but you're going to start seeing rate hikes all over the country. We've seen some crisis of insurance on property in Florida, but Florida is not the end of it. It's going to extend into other parts of the country. Here's a rate hike happening in North Carolina. They're going to see an increase of new or renewed homeowners rates beginning right now. There was a lot of natural disasters in North Carolina, record-breaking hurricane season, and a 24% increase in homeowners insurance rates. That's a big jump. If your homeowners insurance is, let's say, $1,000 a year, that's going to put it at $1,200. If your insurance is $2,000, now it's going to be $2,400. It's a big jump. And it's not just because North Carolina has hurricanes and nowhere else does. Every part of the country is having more natural disasters, whether it's caused by climate change or global warming or whatever, it doesn't matter. There are more natural disasters happening. Floods, hailstorms, tornadoes, fires. Every part of the country almost has some type of increased threat that's going to increase insurance. In addition, another factor that's overlooked is general inflation. If all materials that go into home construction go up in price, or commercial lines. We write mostly commercial policies in our agency. We don't do a lot of personal lines products. But commercial is affected the same way. If building materials, lumber, fixtures, electrical supplies are all going up in price, those are the things that are actually getting paid for with an insurance claim. And if all those things are up in price 30, 40%, well, premiums have to go up accordingly. Labor is also up. One of the biggest factors in insurance rates that's overlooked is the delay in the repair. If materials are not available to fix damage to a property, and that property remains unrepaired for, let's say, 4 months instead of 4 weeks, well, guess what kicks in during that extra 3-month time? If it's a business policy, there's BI, or business interruption, or lost profit insurance coverage. So even if the price of the product didn't go up, which that would not happen, but just assume that the price of, let's say, one particular breaker box is not available and the price is the same, and you have to wait 3 months for that part to come in to finish fixing that residential or commercial project, the insured is getting benefits from the insurance company throughout that time. They're either getting business interruption coverage, or if it's a personal lines, they might be getting rental assistance to put them up someplace until their house is fixed. The insurance companies have to factor that expense into their future premiums by law. So if the supply chain is cutting back on availability of certain materials and making those materials cost more, that's going to have a ripple effect on the insurance industry. Some of those effects haven't been realized yet. The insurance company can't arbitrarily, in most cases, just jack up the rate before they have the cost. Even if you know that cost is coming, even if you know that, all the claims this year are going to have a higher expense basis because of supply chain or inflation, they can't proactively raise their rates now. They almost have to wait until those expenses hit and then raise them the following year. So it's a trailing indicator. So the inflation that we've seen over the last 12 to 18 months may not start showing up in insurance policy premiums for another 12 to 18 months until these expenses start to kick in and they have their annual reviews of premiums. Be prepared for that. As a property owner, as a business owner, that your premiums may go up 20, 30, 40%. Even if you're not in a high-risk area like South Florida that gets hurricanes. Could be anywhere. Could go up even more. We predict that most property insurance coverage, all things being equal, will go up 30% in the next 24 months on average. Some will go up more, some a little less, but on average 30%. So if you look at your policy and look at what your premium amount is and add a third roughly to that, that's what you can expect for your budget a year or two down the road. And factor that into your expenses, whether it's a personal, household budget or a business P&L. use that number for projected costs for property and casualty insurance. Part of it too is because the replacement cost is so much higher because of the property values have gone up. Let us know what you think in the comments. Has this affected you? Have you seen rate increases? We'll see you on the next video.